The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. We were a bit higher in the grain and oilseed trade on Tuesday, led by Chicago and Kansas City wheat, while meantime, cattle complex futures kind of fell out of bed on Tuesday. Was it just a round of profit taking or something else? Got plenty to unpack. A lot of headline news risk, escalation of tensions in the Middle East, and so much more. Let's talk about it. Joining us for market analysis, Matt Bennett with agmarket.net. Matt, it's good to talk to you again, my friend. And, looking at these markets, no shortage, I guess, of things for us to talk about, whether we like these things or not. At least we have some headlines to look at and a little bit of volatility out here in some of these markets, but a generally higher day in the grains on Tuesday.
Yeah, absolutely. I mean, other than July corn, everybody got a little bit of love today. Bear spreading going on there still. It's strange, quite frankly. I don't know if we've got some farmer selling going on. I think the funds are still selling front month, which is interesting because I believe that, they're going to have to roll out of these things here before too long. But you look at these corn, nice little day here, closing up 3 3/4, I guess, is the settle that I just received. And so, it's nice to see that. I mean, of course, you got crude really strong, and I believe that that's going to kind of spill over. And then, some good renewable fuels type of information here over the last few days. Mostly it's recommendations, so we have to be careful to get too worked up over it just yet, but certainly it's good to see that there are people in the administration that see renewable fuels that are U.S. sourced as what we should be kind of going after, and that we need to boost these volumes. And so it's certainly been good for the bean market ever since that news has been announced. It's been up for the beans, and quite frankly, that's a great thing, especially, I don't know, I'm maybe getting ahead of myself in our conversation, but last week, basis just got tomahawked, in some areas, especially crush plants, that aren't on the river and whatnot. And, in my part of the world, we lost 62 cents last Wednesday, and I had guys calling me, is this a misprint? What's going on here? I'm like, well, it's not a misprint, buddy, and unfortunately that was a pretty tough road to hoe. But hey, you know what? We've gotten back 2/3 or 3/4 of that in a lot of places here. So at least we've seen the bean market kind of rally in here.
Yeah, and to your point on that, and I know I was following you on that story, initially seeing that news come out from Central Illinois and ADM, and from what I understand, I mean, that's a typical move for this time of year, but maybe a little earlier than normal. Is that how I understand it, Matt?
A little earlier than normal. I mean, typically you'll see them roll. Sometimes you'll see them roll to August or SEP, actually, but rolling out to the NOVE is not completely uncommon. It's just not normal necessarily. I've seen it happen before. Don't get me wrong. It's not normal to see them take, and roll, and then also take so much basis with them. Because they went from 22 over the July to 20 under the NOVE. So, guys, I mean, there's not a lot of guys holding old crop beans, but they're like, holy crud, what is going on here? So, I think that what you would assume before the RVO volumes were announced is that you could expect a big drop as far as crush plants go. I mean, crush margins had not been good. And just since they announced this, Jesse, I mean, you've seen crush margins just absolutely skyrocket because, of course, soybean oil has gone up. At the same time, cash bids for these folks went down. And so crush margins have certainly improved, and it's a very a good thing, I think, for the crush industry moving forward. And I think that it could provide some excitement, what you would call a little, I don't know if you'd call it guaranteed, but a little bit more of a sure thing as far as demand goes domestically, because that's something I've talked to you about. We really need domestic demand here in the U.S. I mean,
we absolutely
to lose world export share. Yeah, and I don't think we're going to quit losing it.
No, and I think you are exactly right. And you look at bean oil. We took a little bit of the shine off on Tuesday's trade, but I think that just felt more like a little profit taking after two strong days higher. I know there's a report out that the Senate tax bill is looking at including foreign feedstocks up to, I think it's 80%. So maybe
Yes.
some uncertainty on what that 45Z tax provision could look like. But by and large, to what you've been saying, if everything holds as it stands, this RVO business does sound very beneficial for the industry, Matt.
Oh, for sure. Yeah, the Senate proposal, I don't think when people saw, some tweets and emails went out on that today that they were super excited with the Senate coming out with that sort of a plan because, we were talking maybe 50% before that. And so maybe you're going to meet in the middle somewhere. But ultimately, it's no secret that soybean oil for renewable diesel, for instance, lost some significant volume over the last year or so, especially due to used cooking oil coming right out of China. And so, the interesting thing, there was a lot of reports, and I'm going to say reports, rumors, you can call them what you want, that actually some of that used cooking oil was essentially just palm oil,
Yep.
with a little bit of used cooking oil mixed in to call it used cooking oil. I don't know if that was actually the truth or not, but I do know that that came from several different sources. And so, whenever it's gobbling up some of the demand that we need here domestically, it certainly is problematic. So it's nice to see that the government is at least saying, hey, maybe we need to reevaluate this, because again, domestic consumption is going to be huge for us moving forward.
Yeah, we have the crop here. We have the demand for it. Let's grow it here and let's make that a win for America's farmers. You mentioned crude oil earlier. I do want to segue over there and talk the Middle East tensions. And crude oil has gotten a little disconnected from the corn market right now, I would say, with everything going on. If crude was able to get linked back up with corn, could that help pull this corn market a little bit higher here, Matt? What do you think?
Yeah, I mean, clearly we've got some pretty serious stuff going on in the Middle East, and so
Yeah.
I don't want to gloss over it. There's been fighting going on over there for several thousand years, quite frankly. It's not something new, but when you start talking about, hey, you need to clear people out of your metropolitan areas because we're going to bomb the daylights out of you, and that's language going both ways. All of a sudden it gets some serious fears, and you see the crude oil market reflective of that. And in the past, when we've seen that, and you've seen it before, Jesse, whenever you see those types of fears, you also see corn follow right along with crude. And I'll tell you what, corn hadn't hardly been able to see the light of day here lately, especially your front month. I mean, a lot of guys are sitting here with old corn, and people are bidding off the July, and in most areas, other than maybe up in North Dakota, parts of the upper Northwest, you're seeing basis trying to do the work, and so they're buying some bushels with basis because futures is struggling. And that's at a time when you've got a 1365 potentially. I mean, I say potentially because we got quarterly stocks at the end of the month, and the market tells me, Jesse, that maybe there's more corn out there than what we think. Now, I don't think it's in the East. We know that. I mean, they're just scrambling to find bushels. But in the West, you do hear about a fair amount of corn sitting around, especially in North Dakota, South Dakota. So it's going to be very interesting moving forward. Last thing I'll say on Middle East is I think that's part of what's going on with the wheat market as well. That's given it a little bit of a boost, if you will. And so, this wheat market's finally found a friend. We finally done something to get it, at least headed in the right direction. It's not a massive rally by any means yet, but it's certainly better than what we were doing for quite some time, just languishing around the lows. And every time we got an up market, it just got beat down like the whack-a-mole game. I mean, it's finally doing something here.
And to that point, obviously when the Russia-Ukraine war started, we got that huge spike rally in wheat.
Yep.
Maybe not quite to that extent with these tensions, but again, giving us at least some sort of reason to get this wheat market to move higher, that I think wheat by and large has become really desensitized to global unrest over the last several years, Matt.
No, no doubt. The first time that we had issues with Russia and Ukraine, I believe we were up like 40, 45 cents, and then the next time maybe up 30. And then, I mean, it got to the point where we weren't hardly doing anything, And so you're right. It's been desensitized to an extent, but it certainly looks to me, whenever I look around at weather in your major wheat growing areas and some of the yields that are coming off, there's not a whole lot of other reasons to get super friendly wheat. But then again, it's been beat down so long that I think some of these people might be looking for a place, to basically buy commodities as a risk off type event. They want to be able to not have a lot of inflationary risk moving forward. I mean, there's a lot of unrest and not knowing, where the wheat global flows are going to be coming out of. So I think that some people have stepped in and bought it for those reasons.
We're talking with Matt Bennett from agmarket.net here today on Market Talk. Matt, just on the weather subject here, I think that's the other big bear in the room right now. Weather has been pretty good in most areas. I know some folks, your neck of the woods and in the east, have struggled, but by and large, I think the majority has had a pretty good growing season so far. I know we both talked to our friend Eric Snodgrass. He's been tracking and wondering if this Western Corn Belt drought is going to happen this year or not. And at least right now, indications seem to say that it's not happening, at least right this second, maybe later, July, August. But I guess where I'm going with this is these markets right now don't feel like on the grain side they have any weather premium in them whatsoever.
No, you're correct. You're absolutely correct. And to be honest, I just did a video with Eric right before you and I taped this one, that we put on our app. So on a weekly basis, we do a video to try to update things. And, this is not scientific, Jesse, but I told Eric, my dad has told me in the past, whenever we have a strong weather pattern in the spring and early summer, and I've experienced this, but we talked about this week. He said, if you have that kind of pattern, it seems like it changes around the 4th of July a lot of years. And so who knows what's going to happen here? But Eric does see this Bermuda high. Most of the forecasts, they're calling for it to actually come inland and park around Nashville. And you're part of the woods here over the next several days. And if that happens, I'll tell you, Jesse, it's going to mean very hot and dry conditions, at least for several days. In one of the hottest areas, of course, is going to be there in Ohio, which those guys just cannot catch a break. They've been, wet, cool, and clearly they haven't gotten everything planted in some areas. And if you're going to come in with 95-degree heat, and extreme dry conditions, that's not a good recipe for raising a crop. So it'll be very interesting if the Eastern Corn Belt struggles again this year, Jesse. What's basis going to do after that? I mean, there's no doubt that that's where the heart of the issues were this last year in that Eastern rail market. It's just been on fire. You've seen guys in Ohio getting 75, 80 over, and Indiana, even some of those areas, 50 over. And so, what's going to happen if the Eastern Corn Belt struggles again this year? And I think clearly those strong basis levels could end up making their way to the West, because they've got to find that corn somewhere to feed all those chickens and hogs out on the Eastern seaboard.
That's a great point. It's a great point. And something we're just going to have to watch over the next several weeks if that weather scare does come into the market. You mentioned feeding. That's a good segue for us to go over to livestock. And, thinking about the hog market, a little bit lower on the day Tuesday. Hogs have been doing pretty well with cattle here as of late, though, and I'm wondering if maybe just some of that hog pressure Tuesday was because the cattle complex was down so hard, which we can talk more about that in a minute. But, I mean, you get these hog contracts, 111, 110 range. I mean, we're getting to pretty lofty levels in lean hogs, Matt.
I'd say they're pretty lofty levels, all across the livestock sector. You certainly have reason on the cattle side fundamentally to be strong as far as hogs go. I don't know that I can make as many arguments for 110, 111 type price levels. I've had guys call me that there's not a lot of independent hog producers anymore. We know that, but several guys have called me and just said, what do you think here? And I'm like, having a floor under these prices is probably something you need to do. If you want to stay bullish, that's fine. I have the same argument for cattle. I mean, you look over at cattle and cash prices are still just really strong. Fundamentals are very strong, but we have to understand when it comes to cattle, with the funds holding such a long position that there's definite susceptibility to a massive sell-off somewhere in here, even if fundamentals stay strong and the cash market stays strong. Of course, cash will follow to an extent, but we haven't seen convergence there forever. So it's really been a dynamic market. I would be very cautious as to stay bullish in here, but if you want to, at least do so in a smart fashion, with some sort of coverage to the downside, some sort of floor under you, because you could take 20, 25 bucks out of this cattle market pretty quick. Now you may go back up. But if you get caught in that and then you go ahead and sell at the low, you're going to be pretty upset with yourself. So the people can put floors in right now well above break evens in a lot of instances. And with that being the case, I don't know why a person wouldn't want to do that, because it's fairly affordable, to be honest.
Well, and with this cattle complex too, I was going to make the comment that futures are starting to look tired, even though cash continues to roar and futures are trying to chase cash. It feels like cattle futures are finally starting to get a little bit tired here in this window. But I say that, and then I'll talk out of the other side of my mouth and go, well, I've thought that a couple of times now, and we've still found our way to lofty levels. I think this cattle market, the best thing I could say is that it's anyone's guess where we're going to go right now, Matt.
Yeah, I mean, it is anyone's guess. We saw equities down as we were talking here today, and I think that probably put a little bit of pressure on cattle as well. I don't know that it takes a lot, to get some of these guys to say, hey, I've made a fortune being long cattle. Maybe I just need to take some money off the table. And you've got to expect that's going to happen. And once someone starts doing it, and some of these funds see that others are taking money off the table, sometimes that can be a snowball effect. And so, yeah, I'd just be pretty cautious in here.
What about feeding margins? 430-ish board corn, and looking at cattle prices, where they're at. And, a lot of producers are really doing everything they can to manage things right now. I mean, what stands out to you when you think about the feeding perspective of this?
Yeah, I mean, the thing is, obviously, if I'm a feeder and I'm sitting here looking at, cash corn has been pretty darn cheap. I'm not so sure I don't go ahead and lock a few needs in just in case we do run into inclement weather. Because, Jesse, if you look at the balance sheets, for new crop, it's a 1.75 carry, but to get to that, you've got to have 95.3 million acres with a 181 yield. I'm not saying that can't happen. Obviously, if the weather holds where it's at, I think you've got a fighting chance to see a 180 type yield this year. But we're going to need a lot of things to fall into place and fall into place well. Right now, Iowa looks fantastic. A good chunk of Illinois does as well. And, the Dakotas and Nebraska, there's a lot of areas that look really good. But it's still, we haven't even got to pollination yet. So if I'm a feeder and I can lock in margins here by going ahead and buying some cheap corn, I would probably be covering my needs at least a pretty decent percentage.
Matt, good stuff as always. Final thoughts, anything you would mention or reiterate to folks here on the show today?
I'd stay on your toes here, keep some flexibility. I think this market's going to have, we've thrown everything negative we could throw at it. And if we do get a rally, we're not sure at Ag Market. We feel like it could be short-lived, so get your offers in place and be willing to reward the market if it offers you that opportunity you've been waiting on.
You guys got a great staff. You have an app. You mentioned that earlier. A lot of resources available. It's just as simple as folks going to the website or reaching out with a phone call to get started, right, Matt?
No, absolutely. Just agmarket.net. You can get everything you need right there. And, we can help you in whatever way you need.
Agmarket.net for more. Matt Bennett, always good to talk with you, my friend. Thanks for joining us on the show. Have a great week. We'll talk to you again soon.
Absolutely. Same to you, bud.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.